Move on then. We're just chatting about the cement space, so let's get in a veteran then in the cement space, and he currently runs Shree Digvijay Cement. They posted a rather solid set of numbers. The company posted its highest ever volumes at 1.25 million tons in the past year. Margins improved as well on a year-on-year basis. It's one of the few companies to report that sort of an improvement. Mr. Anil Singhvi, the executive chairman of Shree Digvijay Cement, joins us on the show. Hi, Mr. Singhvi. It's been a while since we chatted, sir. Good to have you. Well, let's talk about a couple of numbers for the company specific first. You did 1.25 million tons last year. You're at optimum utilization levels. But have you done any kind of debottlenecking that we can see some volume growth from here? And also on the EBITDA front, well, as per your calculations, you're closer to around 1,200 rupees. We don't take the other income. But from here, can you stabilize at these EBITDA per ton levels? Is there scope for improvement? Give us a broad range.
Thank you for having me. First thing first, at 1.25 million, you asked me this question, whether we can do a little more. I've been saying this for the last couple of years for Digvijay particularly, that there is still scope for us to make this plant give us a better productivity. And I'm reasonably confident that without any further capex, what is the ongoing capex which is being done, I think we should be able to have 7 to 8% growth for 23-24 from the same plant.
All right. And EBITDA per ton?
Well, you talked about other income, but other income is essentially what are my cash on the balance sheet. So either I invest this back in the capex or I earn some interest on that. So I would take this as an operating income. So 1,200 rupees, what we earned in this quarter, I believe would be perhaps the best in the class. I don't think there's any cement company which will come closer to this number, because I've seen numbers of two other companies which are reported in last 2-3 days. Going forward, if the coal prices remain at what they are, or if they come down, because my expectation is that coal prices will come down, they will soften because oil prices already started softening. And as we go into the summer for the European market, I think the coal prices will soften further. So I'm reasonably hopeful that we should be able to do 11 to 1,200.
What about, Mr. Singhvi, good morning. There have been these reports quite a bit, and you're the best person to ask it because you don't mince words as well, that companies have been trying to take price increases, right? I mean, there have been 3-4 attempts, but they've not been able to sort of push it through into the market. What is the pricing scenario? And what's your own sense in terms of how it will pan out into the next 2 quarters?
I'm glad you asked this question, because I think where industry has been struggling, that the fuel prices have gone through the roof. And last 2 or 3 quarters, I was expecting that the prices will slightly move up to cover the cost for most of the players. As you would have seen in last 2-3 years, barring the last year, the EBITDA margins have been about 800 to 1,000 rupees, which have fallen down to about 500 to 700 rupees for most cement players. And that's largely on account of fuel prices going up. But I think it's been a bit of a volume game, if I may use that word, for last about 2 quarters. I think there have been some changes in the market dynamics. And because of that, the companies are pushing the volumes, but really not looking at whether they can recover the cost increases which have come in place. So maybe in a quarter or 2, I think again it will come back to recovering of the cost, because the EBITDA margins have taken a knock in last 3-4 quarters on that. So I expect that this volume game will be over in a quarter or 2 at best from now. And again, one has to look back onto the profitability. So I think sometimes it's a game of profit versus volume. And I think that the volume game is being played out more than the profit game.
Mr. Singhvi, are you saying that, you said that you expect coal prices to come down, right?
Yes.
So
yes.
A drop-off in costs will automatically lead to better profitability, or is it possible if they don't, because these are international commodities, industry will be able to push through higher pricing, or you think that'll be tough to do?
I think if they don't do it, the industry doesn't do it in this quarter, the monsoon quarter will be difficult. So I think price increases you can expect only in October quarter, not before that. But before that, if the fuel prices come off, then somewhat profitability will improve. But otherwise, there will be a challenge for the next 2 quarters in terms of profitability, but volume gain.
So you see an attempt to increase prices in perhaps May and June. If it doesn't happen, then straight away in October post-monsoon, right?
Looks to me the scenario. I don't think there will be, because as of today, it doesn't appear to me that people are looking at increasing the prices. It's a volume game.
Okay. Got that. Can you tell us the total operating expenditure for you to increase your capacity to 3 million tons per annum? How much will it cost, and when is it expected to come on stream, sir?
We just got our environmental clearance just about a week back. It's on the drawing board stage. We will work on that because that has been a question mark for Digvijay for a very long time, that when are we going to have the growth, because this plant will reach to some point in time a plateauing of the productivity. But we have squeezed out the best possible from this plant, maybe another 7-8% more growth this year. But next year, definitely, we would have to look for a growth coming in. So for that, we started working now. We just got a clearance. As I mentioned to you last time, that we have now limestone deposits. So I think it's another 2 or 3 quarters we'll be unfolding that plan.
But adequate limestone deposit is with you to scale up to this 3 million tons. At one point of time, I think before you all took over, that was an issue. But I think that's sorted right now. So you can scale to 3 million tons.
I would say that most things are sorted. And I want to put one point in here, is that perhaps when you look at on the other 3 parameters where the equities are really valued, which is your dividend yield, your ROE and ROC. And I'm happy to say that I don't think any company comes anywhere close to this.
Okay. All right. Well, if it's looking so good and you're a PE-run company as of now, post the takeover, any change of of promoter holding, or does the current company, I mean, that runs the company, the PE, the promoter, they want to continue? At some point of time, they'll want out, right?
I think that question can be best answered by the promoters.
But you haven't heard anything as of now?
I haven't heard anything. If I hear, I will let you know.
I hope so. What about, and you don't want to put a capex number, right? To go from this 1.5 million tons or to 3 million tons, it's still on the drawing board. You'll come back to us with further details.
Yeah, that's what I'm saying. Exactly.
Okay, final question that, we have spoken in the last few months post the big Adani Group deal as well. And you said maybe not in the near future, but in the quarters to come, there could be some inorganic growth from somewhere. Anything have you picked up as of now? I mean, I hear about a couple of smaller plants in South. There's a lot of supply. On the West, you keep hearing about a couple of companies that could be on the block. Something you're picking up that you can share with us?
There is a bit of a lull on the M&A activity in cement industry, because I think most companies are right now looking at how they can increase their volume growth from the existing capacities. And you would see from bigger players that they were operating at around 70-75% of the capacity utilization until about 2 quarters back. And they've all pushed the volumes in last 2 quarters. So I think they want to squeeze out before they go for M&A activity. And profitability hasn't kept the pace. So I think it will be a challenge before they really go and acquire more assets, because at the end of the day, the debt will kill them. So unless the profitability improves, I don't think that there's going to be a big ticket M&A activity next at least 3 to 4 quarters. And largely the damp on account of low profitability for last 2 quarters, and everyone is starting squeezing the cement plants to get a better productivity on that. So I think it's a dynamics which work on how you see the industry profile, how do you see where the valuations are, and then look at inorganic growth. So right now, people are, whatever capex which they have done, they're squeezing the best turn out of that capex.
All right. So it's a lull in deal making, and who better than Mr. Singhvi, who would know consummate deal maker himself. Mr. Singhvi, thank you very much. Great to have you with us here. Appreciate you joining in with that perspective. It's always a pleasure. All right. We've got, thank you. We've got 6 points.